Hello and welcome to the next episode of Don't Get Trapped in Weak Stocks. This is a series that we do every weekend where we try to highlight stocks that have very poor momentum scores and the fact that the underlying thesis in every portfolio should be to remove weakness from your portfolio and to introduce strength to it. Uh, the importance of staying away from weak stocks is, enormous. We don't give too much importance to this aspect, but if you are able to take out the weak stocks from your portfolio, you actually will see a very different kind of a dynamics in your portfolio. It's like, when you are maintaining a lawn, you take out the weeds. You take out the weeds and only let the healthy, growth grow. So this is exactly the same where you have to figure out what stocks are doing well, what stocks are not doing well. The ones that are not doing well, you have to emotionlessly remove them, know when to exit a stock and stick to the strength at all times. That is the whole mantra, at least of the way we approach the market. So you don't have to go through a lot of regrets. Why did I buy it at 100? It is now 20 rupees, and 5 years have gone by, and I'm not able to get my price back. Huge losses, huge opportunity losses, opportunity cost loss, and of course, underperforming stocks will sap the energy out of you. It will take you into a negative energy world where you will start to lose confidence on your own stock picking. So the agenda here in these weekly videos is to discuss stock charts of three stocks with low momentum scores in the three different categories of large cap, mid cap, and small caps, and compare them with stocks with the highest momentum scores in those categories. So let's start with uh, so essentially also how to read the momentum score is it's a score between 0 to 100 within that space. So let's say if we are looking at Nifty 50 stocks, um, the 50 stocks are ranked as per a proprietary method from 0 to 100, 100 being the strongest, 0 being the weakest, and this is basis price trends. So if we look at large cap stocks from let's say number 1 to number 100 in the market cap list, then some of the weak stocks right now are Asian Paints with a momentum score of 5. It's down 32% from its 52-week highs. BHEL, which is down again 38% from 52-week high, momentum score is 6. And uh, Adani Port. Adani Port is at 7 on 100, down from 52-week high by 31%. So all these stocks are weak. They are trading well below not only the 200 DMAs, but also the 50 DMAs. And any absolute momentum or any tactical allocation to these stocks from a momentum perspective is probably not such a good idea. Let's go to the largest uh, or the weakest momentum scores within the large caps. You can see these are the uh, top weakest, or you can say the bottom 10 stocks in that 100 list. Tata Motors is there, ATGL, Adani and Sol, IndusInd Bank, Adani Green, IOC, Adani Ports. All these have fantastic 1 year negative returns. If we see top large cap names or large cap stocks in the same space, and we can't take the names because they are in our portfolios, and most of our portfolios will look alike in terms of these lists. So to protect the current investors in our portfolio, we can't show you these names, but many of them have fantastic returns in that last 1 year. We may not have gotten all these returns, but some of them certainly would be there in the portfolio. So some stocks with 80%, 51%, 86%. So see the contrast of these two lists. If you have stocks from this list, this is what is happening to your portfolio. If you have stocks from this list, this is what is happening to your portfolio. It is as simple as that. Let's go to mid caps. Momentum score of 2.7 on NIACL, uh, New India Assurance Company Limited. SJVN 3.3. At one point of time, these stocks were in high momentum, but they were chucked out by momentum strategies. And then Yes Bank, of course, 6.7 on the momentum score, 42% down from 52 weeks high also, and from its all-time high, it is down, I don't know, 90% or so. So very, very weak stocks, all of them. All of them you can see much below their 50-day moving average also. Idea, NISL, SJVN, Tata Tech, AWL, Astral, Yes Bank, MRPL, IDB, sale, all down significantly. At least by doing this, you are keeping yourself away from the weakness, and that I think is a very big win in the portfolio approach. And whereas There are stocks in the mid cap space which have done 126%, 117, 116, 143, even after these falls that we have seen so far. So fantastic stocks are available within the same space for you to rotate into. Small cap space, 251 to 500 stock. The first one is SW Solar. I mean, a lot of things are said about this company, that this is the next sort of revolution in the renewable space. But just look what the price is telling you. The price is telling you right now it is not the time. There was a time when it was going up, but now it is not the time that you need to be in here. 60% down from 52-week high. 1.4 is the momentum score. Another one, Tanla Solution. I remember we did really well with Tanla when it was going up, I think 2 or 3 years back. It was a multi-bag. But now it is down 50% from the top, and momentum score is just 2.4, not a place to be in right now. The third one is Spark. It is down 66% from its recent highs, 52-week highs. Momentum score is 2.5, pathetically low. These are stocks you don't want to touch with a barge pole. But if you're stuck in them, there is a time to get out of these stocks. Right now, you can say it is very late, but I don't know if this is going to another 50% down. I don't know. I can't say whether it will or it won't, but that's what the chart is telling you. So Honasa, Network 18, SW Solar, Tanla, all these stocks were really loved by the market at some point. Rajesh Export, Chennai Petro. I mean, a lot of money was made in Chennai Petro. Ease My Trip. I don't know what's happened. The promoters keep selling the stock. Alok Industries, Aarti Industries. All these stocks were in great momentum at one point of time, but not anymore. Certainly not recently as well. So you can see the kind of damage they're doing to your portfolio. And within the small cap space, you have all these stocks which are 50 to 150% up. These are the stocks you want to ride with. These are the stocks that are telling you that despite the weakness, they are still maintaining their lead on the rest of the pack. So this is basically why you should be on alert. Weak stocks will drain your capital. Weak stocks will drain your confidence. Weak stocks will damage your portfolio. Weak stocks will take away all the opportunity costs that you have. So sticking with weak stocks will tie up your funds. You'll keep waiting, and some of them will never come back. So missed opportunity will hurt returns. There are other stocks which are doing well right now. Why would you not want to have that opportunity in your portfolio? So staying invested in strength ensures that you are positioned in the best performing stocks. A very, very simple example of this is that there are let's say 50 horses running a race, and after a few rounds you find that 20 horses have taken a lead, 10 are in the middle, and 20 are lagging. Who are you going to bet on? You're going to bet on the top front 20 horses, right? I mean, who are likely to win the race. So that's where the momentum sort of tells you where you should be betting. uh, so this the not showing the top momentum score I have already talked about, but you can consider momentum investing, and any momentum investing, whether it's weekend investing or any other manager, will always keep you with the stronger stocks. So the momentum way actually is to automatically identify and ride high momentum stocks. It will quickly discard stocks that are not uh, you know uh, with the trend upwards. The stocks that are stagnating, stocks that are falling, will be the first ones to get out. So how you can do a check on your portfolio? How healthy is your portfolio? What percentage of your stocks are in strong momentum? What percentage are in weak momentum? Is your portfolio overly concentrated? Is your portfolio well diversified? You can do all this very, very simply. Go here, go to the website. We will you can upload, you can enter your stocks and the quantities, and a PDF will come to your email with all the answers to those 4 questions. You'll have a momentum score, you'll have a weightage skew. You can scan the QR to get there, or go to the weekendinvesting.com site. Do read the disclaimer fully. We are uh, uh, basically wanting you to be aware of what is pulling your portfolio down, and if you can take action, at least you can stop the bleeding from happening further. And that is the sort of essence of momentum investing. Stop the bleeding. Even if your stocks that you choose don't go up as much, but at least the ones that are going down, you should stop bleeding. So that's the message right now. Let's hope that your portfolios are in great health. Do let me know on the comments what score did you get on your portfolio, and I'll see you in the next one. Bye.